Welcome to the program, Pete. Great to see you there. We were talking about the economic data, the proof really coming in the pudding. We talked about U.S. non-farm payrolls at the end of the week, but we've got a lot of data that starts to drip in from China as well, and this is going to be oh so important.
Well, good morning, Nadine. Thanks for the show, and I only wish you guys huge success moving forward. Where we are, look, the numbers will be released over the next 48 hours as far as China's concerned. There's every chance that we had a shocking number going for the read for Feb 35. It'd probably be closer to that 43, 44 number. Many analysts are saying the China turnaround. Everyone's conscious of it. We're also taking on board as far as there are so many moving parts at the moment. It's hard to quantify what the absolute picture is for anything. You've got crude at 20, you've got gold at 1660, the volatility of the Aussie dollar, US dollar at 98. It's hard to, traders are having a great time if you're on the right side of the market, as long as you're not getting smashed.
It's interesting, Peter, because China obviously no longer the epicenter of, the COVID-19 pandemic, but you can't really look at China as a model of what's to come for us in terms of recovery. If we do start to see glimmers of hope in some of their data this week, that's not really a follow through for Australia though, is it?
No, it's certainly not, Ingrid. I mean, we're only at the start of the journey, unfortunately, and if we take on board the sort of events that have unfolded with the tragic situation in Italy and certainly with Spain and now going to New York, it's just an ongoing it's a freight train, and unfortunately I think Australia we're behind in so many ways as far as the data points, but maybe not with the actual the infection side. So how it unfolds economically, it's an unknown. No one can really forecast it, and what impact it has to our economy. We've seen what happened over the last couple of weeks, and I feel as though that volatility is going to remain in the short to medium term.
So the business confidence figures likely to take a hit in Japan as well. We get jobs, retail sales, industrial production numbers coming from Japan on Tuesday. But we've seen a sharp pullback coming through in the yen. So do you think that might be a little bit of a buffer, I suppose, a little bit of, again, a silver lining for exporters?
Well, it could be. I mean, look, the currency markets are all over the shop, and that's been demonstrated certainly with that US dollar sell-off over the last matter of days. We're conscious as far as the yen, and for a market to go up, you need another one to go down traditionally. And the unknown as far as Japan, are we believing the numbers there, the infection rate and so on? So it's, again, I think it's just volatility, Nadine, that will just continue across that yen sector. Have a look at what's happening with the Nikkei. It'll be opening in another hour or so, or hour and a half. And I feel it's going to be, pretty savagely hit to the downside. So maybe there'll be some comfort in the yen. Maybe there'll be some comfort in, a number of those other currencies. But it seems to be, an onward slide at the moment.
Gold, Peter, that's something to look at, obviously. I mean, traditionally a safe haven, though not playing out that way, certainly since this pandemic has taken hold. What's your take on gold going forward?
Well, Ingrid, I mean, when you put your mind back, say, 2 weeks or 3 weeks ago, we were at that 1450 number. It was tremendously sold off due to margin calls and people getting smashed on equities. And it's just that huge, it was such a whipsaw of a market. It was quite incredible, and now it's up the best part of $200 in a matter of 4 or 5 trading days. So the US dollar's coming off. Markets are whipsawing. There's no, we're living this minute to minute, and I really would have thought that gold would be trending closer to that 1800 handle by now. But because of the margin calls and the effectiveness as far as many traders getting caught, they would have just snapped positions to pay margin. That may be now we could see the US dollar come under further pressure to the downside, which will naturally push gold even further or higher from here.
Well, Aussie gold miners in early trade at least are feeling the pressure as we move further into this Monday session. So what are you sort of watching when it comes to some of the technical levels, when we look at global markets around the world, Peter? I mean, what is the sort of, it's a sort of one mark that you're looking for to help you place your trades this week?
Well, naturally, the US dollar is such a huge component of everything that we look at. We're one of the largest FX traders in the world, Nadine, and we've got huge customer base globally. And that US dollar is such an integral part as far as the mix, because that really drives sentiment, it drives opportunity, and traders naturally have the flexibility to be short now and then can be long, in 6 seconds' time. So they're really conscious as far as the fundamental news coming out. They're looking at technicals. They're saying is 98.5 the floor as far as US dollar. The Aussies had a huge rally to the upside in the last matter of days. And I know that might be a little bit ambiguous what I'm saying, but it's such all over the shop. Only going back a couple of weeks ago, you had crude at $52, 53, and traders are saying it's a $65 trade. It's now sitting at 20. Yep. So, I feel as though that you've got demand destruction across so many different sectors that depends on the sector, depends on what your preferred trade is and what your risk metrics are from a trading perspective.
I mean,
and that really...
Sorry. US crude oil now below $20 even. That's an 18-year low. So it's, it's pretty horrific out there. And obviously oil, as you say, that has an impact on a lot of other commodities, a lot of other industries. I mean, just how significant is it, Peter?
Well, it's massive, Ingrid. I mean, using 100 million barrels a day, and we're conscious as far as the big picture. You've now got huge demand destruction across the globe for all airlines, trucks, ferries, you name it, all forms of transportation that are being crimped. So the consumption numbers are naturally being, pushed down daily, and the price is demonstrated. Plus, you've got a war, really, of words between Russia and Saudi as far as, OPEC plus, and then you've got the US shale producers, which are backed by President Trump. So you've got so many continuing conflicting components to that story. I think it's got to be lower from here. I wouldn't be surprised to take a 16 handle. I think it's got for WTI. I just feel as though that there's, push to the downside.